Hello, everyone. Happy new month to you all. Happy new week as well. Good morning. And depending on what time zone you are tuning in from, I want to wish you a good afternoon and good evening. I'm so excited as always to welcome you all to the first edition of the Forex Morning Mastery for the month of December. And of course, we are preparing for the last trading month for the year. And it usually comes with its own peculiarity as major key players will be doing some repositioning ahead of the new year, and of course doing some end of the year transaction, which obviously will be reflecting on in the market as well. And there is a high chance that we could see some high level of volatility during the first couple of weeks of the new year, of the new month, sorry, before the Yuletide season, where there is a drop in volatility. So, of course, we are going to be planning to strategically maximize the opportunities we tend to get during the first couple of weeks of this month. So, I'm glad to have you join me this morning, and I hope you all had a wonderful weekend. I just saw your comment now from Fluoride. Good morning to you, Fluoride. How are you doing today? Well, I had a very splendid weekend. We went for a chess tourney with my daughters, and they did very, very well. It was quite a very good weekend for me. I hope you also had a wonderful one too out there. So thank you very much, Fluoride. And I would love to hear from you all in the comment section. And I hope we are all ready and pumped up for the new week. And of course, I am also, as always, I have three financial instruments that I would love to share with you, my trading ideas on them, and how I intend to capitalize on potential trading opportunities on all of these assets, taking into account the fundamental factors and, of course, the price action perspective of the market. So I encourage you to stay tuned in, as you do not want to miss out on any of these valuable, simple, and insightful ideas I am about to share. And for those of you who are joining me for the first time, you are highly welcome on board. I'm very excited to have you around with me this morning. The Forex Morning Mastery is not a signal service platform, but an educational avenue where we all come together as a community to become a better trader. So here on the Forex Morning Mastery, I share with you my thought process, my trade management process, and of course my plans for the trades I personally take on a weekly basis. So for this week, we are going to be focusing on three financial instruments as always: the USOILSPOT, the GBPUSD. I finally took on the GBPUSD this morning. I was still considering taking the USD instead, but I have finally decided to take on the GBPUSD. So we are going to be looking at that one, and of course my favorite asset, the XAUUSD. So if you're new with us and these are assets you're willing to trade for this week, why not stay tuned in to see what my ideas are as regards to navigating that market dynamic. So we run the Forex Morning Mastery 3 times in a week: Mondays, Wednesdays, and Fridays, 8:30 a.m. UTC. That's 9:30 a.m. West African time. So I'll always encourage you to be part of that session. Trust me, the more time you spend with me, the better you get to understand my own analytical approach, which eventually you can incorporate into your personal trading decisions. So once again, I do welcome you on board and encourage you to actively engage in the comment section. If you have any questions whatsoever, feel free to drop them in the comment section. Trust me, I'm here and willing to be of help in that regard. So, and also do not forget to give the video a thumbs up, please. This is one way you are supporting the community to grow, and of course it's also the cheapest way to help the algorithm identify our video and push it to a wider audience of traders. So I try as much as possible to encourage us all to make the likes tally with the number of people on board, and that increase the chances for the algorithm to identify the video. So please click on that like button, and thank you very much as you do so. So with that said, we will be diving right into the business, and as always, the first thing we usually do every morning, in fact it's our routine, it's a daily ritual, is to keep tabs with the fundamental factors that will be influencing the sentiment in the market this week. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us that information and, most importantly, timing to strategically position ourselves for the next move. Now, based on the asset we are looking at for this week, we will be focusing on events, economic features from both the United States and the United Kingdom economic docket. I usually prefer high impactful event, but for days where we do not have high impactful event, we want to be including mid-tier economic features so that we can have a broader view into what market participants will be looking forward to make their informed trading decisions. Now for this week, we are looking at today, Monday, December 2nd, the first day of the new month. We only have one high impactful event, that is from the United States economic docket, and that is the ISM manufacturing PMI. So this purchase managers index is varies. It has a range between 0 to 50. It gives us an insight into the health and performance of the manufacturing sector in the United States. Now, if the data comes in below 50, it's a sign that there is a contraction in the manufacturing sector. And if the data comes in higher than 50, that is a sign that there is an expansion in the manufacturing sector, which obviously will dovetail to a positive traction in favor of the US dollar. However, if you have been with me for a while now, you will have realized that the manufacturing sector in the United States has been struggling for the last 5-6 months, if I'm correct, and the data has been consistently below the 50 mark. And as you will see here, the previous month data came in at 46.5, way below the 50 mark, and market participants and economists are projecting that we are likely going to be seeing a 47.5 based on what the survey they have, the data they have presently. So we will look forward to see what the actual data will be. And from what the economists are saying here with the 47.5, so that means there's likely going to be a little bit of increase from the previous month. So we look forward to see what the actual data will be. Will the data come in just as market had expected, or it will come in below expectations, or beyond expectations? And of course, we do understand the theoretical implication of what it's going to be like in the market. So if the data comes in higher, there is a high chance that the US dollar may gain traction as a result of this. And if it comes in lower, we're likely going to see a drop in the US dollar. And if it comes in just as market had expected, so it means that there are no surprises at all, and price will just continue in the direction it is going prior to the event. Now, besides the ISM manufacturing PMI, we are also going to be looking forward to a couple of speeches from Fed officials. We have Waller, which is coming in about 8:15 p.m. UTC today, and then about an hour after, we are looking at Williams, which is coming about 9:30 p.m. UTC. Of course, these are major Fed officials who are voting member of the FOMC committee, and market participants will be scrutinizing their rhetoric for clues into economic outlook, monetary policy decisions for the Federal Reserve. So these are events we are going to be looking forward to today. Now, since we are not going to be running our live session tomorrow, it's important we also take into account event we will be looking forward to tomorrow, that is Tuesday, December 3rd. Now, for me, since we are looking at the GBPUSD for this week, it is very important that we take note of the BRC like-for-like report, which will be coming in 12:01 a.m. UTC Tuesday morning. And this is a data that will be giving us an insight into the performance of the retail sector. Now, based on the previous data, we had a 0.3% expansion, and economists are projecting that we may likely see a 0.7% expansion for the month of November. So we look forward to see what the actual data will be like. Generally speaking, a higher expansion and increased expansion shows that the economy is doing very well, which could rub off positively on the Japanese on the British pounds. Then another event which we want to be looking forward to this week, on Tuesday, is the JOLTS job opening, which is a labor-oriented data released by the U.S. Bureau of Labor Statistics. So it helps us to understand the job vacancies in the labor sector by collecting data from employers, including retailers, manufacturers, and different offices in the economy. So this is a monthly report. So if the data comes in higher, that shows that the labor sector is tight, which is going to be a good signal for the US economy and of course the US dollar. So we also want to be looking forward to that one coming about 3 p.m. UTC tomorrow. Then we also had a couple of speeches again from Fed officials from the United States, Kugler and Goolsbee, major events to also look forward to this week. So these are the events we want to be looking forward to. I encourage us to mark out the timing so that we will be adequately prepared for the big move that they may likely cause in the market. Now, to further reiterate this, I usually mention this multiple times, that major key players in the market do have insiders in this department that probably gives them first-hand information of what this data is going to be like. Now, with this information, they usually position themselves ahead of that event, and this positioning is a clue for us to understand where price is likely going, as their positioning will reflect on the chart as price action, structural patterns that we can use to strategically position ourselves for the next move. So with that being said, here we will be diving right into the charts. Now, as always, the first assets we are going to be looking at this morning is going to be the USOILSPOT. Now, let me say this quickly. I did not share any video during the course of the weekend. Normally, I usually share one or two public videos on the assets I'm monitoring for the week, that is giving you a top-down analysis and of course a market overview of what is going on in that market. But for this weekend, I wasn't able to do it. My time schedule was so tight, I never had any time to do that. But so that means that today we are going to be having a session where we will be looking at all of these assets from a detailed technical perspective, that is top-down analysis from the higher time frame, which makes it much more interesting. So the first asset we are looking at this morning is the USOILSPOT. And of course, last week we were able to be part of an initial bearish opportunity during the first half of the week. If you were part of our trading session last week, before the market went into a choppy setup where indecision prevailed throughout the second half of the week. And I went on to explain to us on Friday why this is so, as we had the postponement of the OPEC Plus meeting that was supposed to happen at the end of last month, I think, and now it has been postponed to on the 5th of December. That's on Thursday, and due to this, market were very, very cautious of placing any aggressive bets at this point. Well, that actually led to multiple losses for me, as I relinquished all the profit I made from that first sell position at the beginning of the week. So we want to look at this today and see what is likely going to happen based on the recent development in the global market space, and considering the the OPEC Plus meeting coming on Friday. How will the market digest this information, and how will they anticipate the OPEC Plus meeting? Now, besides the OPEC Plus meeting, there is quite a lot of other factors behind the scenes, which of course has been influencing the USOILSPOT. You will see that the last 1 week price was more or less to the downside, and this was basically as a result of a strong US dollar, which makes the US crude oil much more expensive for international buyers to purchase. Now, to simply put, for those who are using other currencies to buy the USOILSPOT, you know this is a US dollar denominated asset, and currently the US dollar is doing very, very well. The value of the US dollar is quite high. So for converting your local currency to the US dollar is quite expensive, hereby reducing the demand for oil. And in our simple economics, when price of a commodity is too high, what happens? Demand will definitely drop, as marketers will want to wait for a better time where the price will drop a little bit before buying, and this reduces demand and pushes price to the downside. So currently the price of US crude oil is primarily driven by the strength of the US dollar, and of course we cannot take out the geopolitical factors with some influence from economic data as well. Then currently, to further support the strength of the US dollar, we have this sentiment around rate cuts, where despite a significant probability of 67.1% of Fed rate cuts, as projected by the CME Fed Watch tool this morning, uncertainty still persists, limiting the potential for relief in oil prices, which is tied to monetary policies, of course. Then another thing that is further strengthening the US dollar at this point in time is the fears that the US president-elect, that is Donald Trump's tariffs plan, might slow the Federal Reserve's easing cycle, which could further also strengthen the US dollar and negatively impact on oil prices. Now, if you look at these factors I just explained here, you will agree with me that the path of least resistance for the US oil commodity is looking south. The tendency for price to continue to drop is quite high at this point in time, considering the influence on the US dollar in this market. However, we could still take into account some other factors as well, which could also negate these bearish expectations. We're talking about the geopolitical tensions in the Middle East. We have heightened tension in West Asia, which could raise concern about potential supply disruption, and of course give some hope for buyers of crude oil, given that tendency to push price to the upside. Then recently we had a very positive news from the Chinese economy. We had an improved Chinese manufacturing data, suggesting that there is increase in that sector. And when there is increase in the manufacturing sector, you know it usually will affect oil, because when there is increased activity, oil is needed to power this activity. So this increased demand, this positive sentiment from China, which is a major consumer of crude oil in the world, could offer potential support to the price of oil at this point. So these are two major factors that could counterbalance the bearish expectations in this particular market. However, it is important to state that the uncertainty surrounding the OPEC Plus meeting will also contribute to the element of unpredictability that is going on at this point in time. You can see since Tuesday last week, the market has more or less been in a range-bound structure between the $69.50 level and the $68 area. Now, with this being said, the impact of this potential delay of the OPEC Plus meeting is behind that uncertainty we are seeing at this point in time. So we don't know how that is going to influence the market, but I have a strong feeling that major key players in this market may likely want to step aside from the market, waiting for this event to happen and listen to what the report will bring. Some market analysts are suggesting that there could be an increase in rate cuts ahead of 2025, and if that is going to be the case, it could push price of crude oil to the upside. So overall, the US crude oil prices face a mixed landscape with support from demand optimism and geopolitical concerns, but notably pressure from currency dynamics like the US dollar and of course the Fed policy expectation. So how do we translate this into decision making today? How do we translate this to decision making for this particular week we are entering to? Of course, we want to understand how market participants are digesting this information, and of course it will definitely reflect on the chart as price action. Now, going into the charts and looking at things from a technical standpoint, I am going to be taking into consideration the character of price action since the beginning of the month of November. And if I do that correctly, this was what I was able to come up with. So let me zoom in so we can see. First of all, I was able to identify this trend line right here, which had played a significant role in determining the direction of price action in the last 3 to 4 weeks. So we saw price break down the trend line here, showing signs of strong bearish sentiment in the market. That is during the first half of the month of November. Then we saw the bearish momentum continue, and not until mid-month we saw price breakout retest that trend line. And since the mid-month of November, that's about 2 to 3 weeks of historical data, you will see that price had continued to stay above the trend line to emphasize the strength that buyers may likely push price to the upside. And this is giving us an insight into the way market participants are thinking at this point in time. You can see there is a tendency, there is a leaning to the upside, but they do not want to be too aggressive in that bearish sentiment at this point in time due to the anticipation of this OPEC Plus meeting before making that decision. So they are maintaining that buy pressure pending the time this event happened. They don't want to go too far away from this trend line we are seeing here. Now, with this information here, we need a level that will help us navigate this market next week. And here comes, this is where my key level comes in at the $68 area. And through the course of the time we had this descending trend line, you can see how significantly this key level at the $68 area at determine the direction of price action. So you can see it was a demand niche at some point during the second week of November. We saw a little bit of choppy market condition, which reflects the indecision at that point before price action climbed back above that structure during the mid-month of November. And since then, we have seen how it had become difficult for sellers to break through. As every point in time price comes into the structure, we saw buyers push price to the upside. And this, of course, also happened during last week Friday session, as we saw here. As soon as price came into the structure, we saw buy pressure resumed around that area, and this was exactly where price action closed at the end of last week trading session, making this area a crucial juncture to look out for either buying or selling this asset. And look at how beautifully that key level at the $68 area also shares a confluence with that descending trend line we marked out earlier. Now, the question we should be asking ourselves at this juncture is, will price action respect the trend line to continue that momentum we saw here in the last 2 to 3 weeks? That is one perspective. Or will price action break down, retest the structure to incite a massive sell-off? So this is what we are going to be looking at today. So let's scale down into our execution time frame just to see how market participants are reacting to this particular area since the new week and new month had began. So with that information here, you would agree that we are at a crucial juncture. So let's scale down into the 1 hour time frame, which is our execution time frame, to see how the market has been playing out. So scaling down into the 1 hour time frame, this was what I was able to come up with. Now remember, our key level is still very much intact around the $68 area, and as you will see, this is the support. This is the first support line for this week. This is where price action started this week, just along that this descending trend line we identified on the higher time frame. And look at what happened. Price action climbed up, and then we have our first resistance line for this week at the $68.70 level. So you can see that in the last 4 to 5 hours, buyers have been finding it difficult to break through that particular area. So we now have a structural pattern which is in a range bound structure. As you will see, price action has been confined within the $68.70 level and the $67.95 area to emphasize and also buttress the level of indecision that is going on in this market, and which is in alignment with the fundamental factors we talked about earlier. Now, how will this OPEC Plus meeting influence the market around this area? No one knows yet, but we will rely on our technical skills to determine where price may likely go for this week. And you know how we use our range bound structure. Whenever we identify them, we wait patiently for price action to either break down the support line to give us an opportunity to sell, or break out of the resistance line to give us an opportunity to buy. Now, let's first of all, considering the bearish momentum that gripped this market as a result of the strength of the US dollar in the last 1 week, let's talk about the bearish expectations first, and then we'll talk about what chances the buyers have. Now, if you look at the structure here, remember, this is the descending trend line we spotted on the 4 hours time frame, which obviously has been supporting the bullish momentum. And of course, look at how beautifully that same level shares a confluence with that support line for this week around the $68 and the $67.95 level. So if we are going to be selling the US oil spot, definitely we want to see price action breach and break down this support line. That is the first signal we want to look out for before considering selling this particular asset. Now, if price action breaks down the support line, I'm not going to be jumping into a sell right away. And the reason why I will not be jumping into a sell is simply because a breakdown here could still turn out to be a false breakdown. Remember how this oil zone has become a demand zone in the last 2 to 3 weeks. So it doesn't make a sense just selling that breakdown right away. We'll need some form of confirmation before jumping into that sell. Now, if we are going to be selling, I would like to see price do some retest of structure. It's could on the lower time frame, like the 5, 10, or 15 minutes time frame. In fact, it could so happen that if price breaks down the structure, it could take a day or two before price action comes back to retest it. That is, if we don't see any form of retest on the lower time frame right away. So for me to sell, I would like to see price breakdown, retest the structure. I want to see signs that buyers are finding it difficult to stay above the trend line, and this obviously will reflect on the chart as continuous selling pressure below the structure to incite that selling idea. So this is the only condition at this point in time that will make me feel comfortable joining a sell. I hope that is very well clear on that one. So now that we've talked about the bearish expectations in this market and how we are going to be joining a sell, let's zoom back into the bullish expectations. So we've talked about the tendency for the trend that started last week to continue to the downside, which is going to be further supported by the strong US dollar. Now let's talk about the potential that buyers could come in. Maybe the current geopolitical tensions in the Middle East, the Russian-Ukraine war, could probably give buyers some hopes to push price to the upside. And of course, banking on the positive report from the Chinese manufacturing sector could also bring some momentum into this particular market. Now, if that is going to be the case, the first thing first is that price must maintain above the trend line, which is currently what it is doing right now. So price is above the trend line. So definitely we want to be looking out for structural patterns that support buying ideas. Now, if we zoom into what has been going on here in the last 4 to 5 hours, look at the character of these candles around this area. The first thing first you will observe is the nature of the wick of this candle, which projects that there's been a sharp rejection of that resistant line you're seeing here. So we can see it's a very strong rejection at every point in time price comes into that area. In fact, this one here is looking more like a doji candle and has a little bit of a shooting star sort of a character around it. Now, the current candle is still running, and in fact, you can see that it shows signs of indecision going on at this point, and we are looking at how many minutes left. We have about 33 minutes left for this candle to close. Now, for the fact that we have a support line at the $68.27, I would have loved to have bought here, but I missed out on that one. I was still asleep when this happened. Look at that breakout after this continued buy pressure here. We saw the breakout retest. I would have loved to join here and probably be running with about 45 pips in profit, but since we've missed out on that one, the next point of contact is to look out for the breakout of the structure. So I still can afford to risk a buy above the structure despite the continued resistance here, and one of the reasons that will support the idea of buying there is simply because price still remains above that descending trend line we identified on the 4 hours time frame. Now we need to give enough breathing space for price action to move around because of the tendency for choppy market conditions. So if we are buying above the $68.70 level, we should definitely have a stop loss between the $68.27 and of course the key level. So we are looking at between 40 to about 65, 70 pips of stop loss if you can afford that one. It's a long-term trade. It's a swing trade approach which we I usually take on. I rarely scalp the market, so I more or less take on a swing trade approach. So I would like to give enough breathing space for price action to move around here. And if we get to have price action do a breakout retest, it further helps us to confirm that price is likely going to continue the uptrend move. And as soon as price breaks out of this trend line here, that is around the $68.90 level to $69 area, we move all stop losses to worst case scenario break even and continue to monitor price action from that particular area. Of course, I will definitely let us know in the comment section of my TradingView and Telegram platform if we are going to be adding more buy positions or not. But at this point in time, this is my simple setup here. Since I've missed out on buying at the $68.27 level, I'm looking forward to the break of the $68.70 area to continue that trend to the upside, and I will not be thinking of selling unless this descending trend line and the $67.95 level is broken and retested to the downside. So that is my simple view here on the US All Spot. I do hope I made myself very, very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I would take some 5, 10, 15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. And don't forget to give that video a thumbs up, and thank you very much as you do so. So see you in about 5, 10, 15 seconds from now. Cheers. All right. So I see a bunch of comments. I see your C40. Good morning to you. Glad to have you around. Flow Rider. Good. Oh, C40 says it's 4 a.m. in Canada. Wow, that's massive. Good morning. Good morning. All right. So I see you, Flow Ride. All right. Thank you for the support, Flow Ride. Thank you for the support, C40. Good morning to you guys, and glad to have you around with us this morning. So in the absence of no questions, I want to assume that we are all on the same page. Thank you, everyone. So I see Michael Mowa. Michael Mowa, it's been a while since I saw you. Happy new month to you. It says here that what confirmation pattern do you look out for in lower time frame to enter the market? Well, that's a very good question. So when you talk about confirmation, is it depends on the direction we are looking at. That's the first thing you want to know. So if we are looking at an upward scenario, that is, we are looking to buy, let me say, for instance, the $68.70 area is an area we want to be buying. We are not looking for confirmation in this sake. Price is above the trend line. Placing a buy stop order there is just right on point to risk a buy position and join that uptrend move, and let's see if it's going to work out or not. But in the case scenario where I said we will be looking out for confirmation is the $67.95 level, and basically it's due to the fact that this area has been a strong demand zone in the past. Now, if price action ever breaks down the structure, we scale down into a lower time frame where we look out for signs that price comes back, retest the structure. All we want to see is signs that buyers are finding it difficult to maintain momentum above the trend line. So that means sellers are the one dictating the pace in the market. And if we look at candles, you could look out for shooting star candles. These are candles that show signs that sellers are present in the market. You want to see continued signs that price keeps coming back down from that particular area. It comes back down from that particular area on your lower time frame, your 5 minutes, your 2 minutes, your 1 minute time frame. You see signs that price keep coming back to the downside from that particular area. It simply tells us that buyers are losing momentum and do not have that strength to continue to the downside. And sometimes you could look out for reversal setups around that particular area. So I talked about candle patterns. Then you can look for reversal patterns too as well. You could look out for price doing something like a double top structure around that area. As you will see, a double top structure here shows us that sellers keep pushing price down whenever buyers push it up. So these are signs. Then you look out for the breakdown of the neckline of the double top, then you join that decline. So these are signs. There is no specific sign that you want to look out for. All you just need to do is understand that behavioral pattern around that area. So it could be a shooting star candle, it could be a double top structure, it could be a head and shoulder pattern, a rising wedge, whichever case it may be. All you just want to see is signs that buyers are finding it difficult to stay above that trend line. Then that will be a beautiful sign that sellers are pushing price to the downside. I do hope I made myself clear there, Malwa, on that one. If I didn't, let me know again. I will try to look for other ways to explain it. All right. So in the absence of no questions, we shall be moving on to the next asset on our watch list, but I will have to attend to my little boy just for a minute. I will be right back in a moment. Thank you. All right, you're welcome, Moa. So we're moving on to the next asset. So the next asset we are looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And of course, we came back to the GBPUSD last week after trading the USD JPY for about 2 to 3 weeks. And then it took me a while before deciding to start trading the GBPUSD back. And for this week too as well, it took me a while before deciding that, because both market has beautiful structures. The USD JPY has a beautiful structure to help navigate the market for this week. Same with the GBPUSD. But after I took into account the fundamental factors, one of the reasons why I did not trade the USD JPY is basically because of the speculation surrounding the potential intervention of Bank of Japan into that market. which no one knows when that will happen. And as a result of that, I didn't want to expose myself in the market that has a high tendency of uncertainty. So I decided to take on the USD, on the GBP USD, which more or less still has some also good potential on both sides, that is buy and sell. And of course, we saw last week how the British pounds gained some significant amount of movement, giving us also some significant amount of profit. Remember, we had multiple entries to maximize that bullish move. And for those of us who were part of that journey last week, well done and kudos to you. And what is the basis behind that bullish momentum we saw last week on the GBP USD? Well, one of the major reasons behind it is the reduced Bank of England rate cut expectation, and this was coming at on the back of a stronger than expected inflation figures from the United Kingdom, and this has provided a foundation for potential GBP stability, limiting any form of downside risk on the British pounds. And from the recent data we saw in the economic forums, there is an increased underlying price growth in the United Kingdom, which suggests that there is less likelihood of any further Bank of England interest rate cut this month, and this will continue to support the British pounds and limit any downside on this particular asset. However, I did talk about this earlier, that the US dollar at this moment is very, very strong, and we do not know if this is going to negate the bullish potential of the British pound, especially after we had Donald Trump's tariff threat during the course of the weekend, where he did say that it will be giving 100% tariffs for countries who want to dump the US dollar, especially the BRIC nations, that would, if they try to dump the US dollar, that they will give them 100% tariff on whatever they import into the United States, which obviously could strengthen the US dollar further. We don't know yet. And of course, this also could also reduce any form of aggressive interest rate cut from the Federal Reserve. And you know, if that happens, the dollar will continue to get stronger, and it could limit the uptrend scenario from the British pounds at this point. So for me, there are no explicitly stated positive driver for the GBP that will likely help to negate the bullish potential for the US dollar this week. And if you look at the economic calendar for this week, there are no major high impactful event from the United Kingdom, all of which are just mid-tier economic features. Okay, we have the Bank of England's governor who is going to be speaking on Wednesday morning. Well, majority will also want to listen to what he will say, which could bring in some extended sideways trading activities as market participants wait for this data for this speech to come in before making any decision. So market may be a little bit cautious. There could be a cautious market mood, and it could also be amplified by the anticipation of the key US macroeconomic data. So we are talking about the ISM manufacturing PMI, and of course the almighty non-farm payroll report, which is coming up later in the week. Let's see how this is going to do that. With this information, I hope you all have an insight into the GBPUSD market dynamic. Now, with this information we have gathered here, let's go right into the chart and see how the markets are digesting this information and how they are likely going to be anticipating the event we are looking forward to this week. So for this week, I started my analysis on the 4 hours time frame, As you will see here, the market has been very bearish in the last time since Donald Trump won his election. The US election, we've seen the US dollar continue to rally, and it has continued to be supported by the Donald Trump's expansionary policy, which everyone is expecting, and this is favoring the US dollar going into the new year. Now, will this momentum continue? Or is this will the breaches be able to do a little bit more of rebound going into the new week? Well, the 4 hours time frame, what I did here was to take into account the character of price action in the last 2-3 weeks. I didn't want to really go too far to see how we will strategically position ourselves for the next move. Now, looking at the structure here, you will see following the US election, we saw the US dollar culminate its momentum around the 1.2500 area, and ever since it got into the 1.2500 area, we saw how it became difficult for sellers to continue to the downside. As every point in time price comes back into that area, we saw buy pressure resume, pushing price to the upside. And of course, we were seeing this as a potential rebound, which is a counter trend opportunity, of course, and it could be the retracement, the beginning, let me say, of the retracement of that impulsive leg that started after the US election, as you will see here. So how far will this retracement phase go before it continue the downtrend move, or is it going to go further again to the upside? This is what we want to answer going into the new week. Now, looking at the structure, taking into account the character of price action in the last 2 to 3 weeks, you will see that the rebound had evolved into an ascending channel. Now, connecting the series of higher lows, look at the ascending channel, as you will see here. Hold on a second. Hold on a second, please. So, okay. So this is the ascending channel, and then when we connect the series of higher lows, we have the support line of the ascending channel. And within this ascending channel is a imaginary trend line which demarcates the upper half of the ascending channel to the lower part of the ascending channel. And look at what happened during the second half of last week. As soon as price broke above the trend line here, you can see price had continued to maintain buying pressure above that structure, supporting that uptrend scenario, as you will see here. And look at how price closed exactly along that trend line. So the question now is, will this trend line be respected one more time to continue the uptrend move, or will this trend line be breached and broken to the downside to incite a sell-off? Now, to help us navigate this area, we need a key level which is beautifully located at the 1.26850 level, a level which has been a selling niche at some point during the month of November. Look at what has happened here. Buyers finding it difficult to break through, as you will see here, and this all continued into the later part of the month of November, as you will see here. And finally, on the last trading day of the month of November, we saw price break above that structure, and it appears that the bullish momentum isn't looking very strong after it broke out of that key level. Now, why did I say so? Well, if you look at after the breakout of that key level at the 1.2685, look at the character of this candle. Look at the nature of this candle. It is a shooting star candle. Immediately it touched that psychological level at the 1.27500 area. What a sharp rejection that was, showing us signs that sellers are very, very strong around that area. Now look at that second one here. Another shooting star candle also came up around this area here, giving us a further sign that sellers are very strong at this point in time. Now, will this be a sign that we are about to see price continue the downtrend move. Remember, I told you earlier how strong the US dollar is at the moment. The treasury bond yield is doing very well. The US economy is resilient. We have the tariff threat from Donald Trump. What else again we have? We have expectations of less aggressive Fed interest rate cuts anytime soon, and everything is just in favor of the US dollar at this point in time. And if this is going to be the sentiment the market will drive on, we may likely see price drop to the downside. And you know how we use our key levels, of course. It serves as a yardstick to guide trading activity for the new week. If price maintains above the key level, we look out for buying patterns. If price drops below the key level, then we look out for patterns and structures that support the idea of selling. Now, we want to scale down into a much more lower time frame, that is the 1 hour time frame, which is our execution time frame, to see how market participants has been reacting to this important confluence since the beginning of this week. Now, scaling down into the 1 hour time frame, we'll begin to see things much more clearly. And look at what has happened this week. The week has started on a strong bearish note. We saw price started the week around the 1.27350. As you will see here, it dropped into the 1.26800 area, giving us a range bound structure as price was confined between the 1.268 and the 1.27350. Now, are we going to be seeing price breaking down the structure? Well, look at how beautifully this structure also lines up with our trend line we marked out earlier. So for me, I would like to see the tendency is looking very bearish at this point, and from a long-term perspective, the path of least resistance is looking bearish. If we look at it from the fundamental factor, the path also looks very bearish. So for me, I would love to join a sell at the breakdown of the 1.268 right here. So a sell stop order below the structure is looking promising at this point, favoring the US dollar. And of course, you want to be having your stop losses way above the previous high, above the 1.271, dovetailing to approximately 30 pips of stop loss on this one. And let's see how far that bearish momentum will go. However, if sellers find it difficult to break through, in fact, if you look at what is going on here, the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours, sellers have been finding it difficult to break through. Now, if this persists and continues to negate sellers' attempt, we may likely see price continue the uptrend move, and maybe the market will continue to ride on the reduced Bank of England rate cut expectations ahead of the major event coming up this week before going back in favor of the US dollar. So if we are going to be buying the GBPUSD, then we would like to see price take out the resistant line at the 1.27350 to join that uptrend move. However, I still think that we have an opportunity to join that uptrend even before price breaks out of this resistant line at the 1.27350. And the reason why I hype this idea is basically because price is sitting above this trend line we cited on the 4 hours time frame. So of course, you know how we use our ascending trend lines. As long as price remains above them, we will continue to look out for patterns and structures that support the idea of buying. So if that is going to be the case, I think we have a structure at the 1.271, I guess. Is that too high? I think 1.271 will be looking okay. So we have 1.27100 level just right within the range bound structure we've identified here. So if price can break out retest of that structure, we can be looking at joining the buy early enough, that is before the breakout of the 1.27350 will happen. And if we are buying above the 1.271, we want our stop loss to be below the previous low, which is about 30 pips also approximately in stop loss. So price breaks out of the structure, we join the uptrend scenario, then we're looking at adding more buy at the breakout of the 1.27350. So you know how we do this when we try to maximize our positions. So as soon as the second buy position gets triggered and moves up, we move the stop loss of the first buy position to break even and allow the other second buy position to continue to run. And if that one moves maybe about 25-30 pips, we move both stop losses to the entry point of the second buy position, making sure that we keep our we secure our exposure into the market. So this is basically how we are going to be managing this trade today. So you can see our center of focus for today's trading session is between the 1.271 and the 1.268 area, where depending on the direction of the breakout will determine where we shall be going for today. So I hope I made myself very clear on that one, but if I didn't, it's okay. Just let me know in the comment section. I'm here and willing to clarify further whatever is misunderstood. So I will be taking the next 5, 10, 15 seconds off. Let's see if there are any questions whatsoever before we move on to the final asset on our watch list for today. And guys, do not forget to give that video a thumbs up if you found this content helpful and useful in making your independent trading decisions. Why not give that video a thumbs up? Thank you for your support. And for those of you who had clicked on the like button, thank you very much. I really do appreciate your support. So let's see if there are any questions before we move into the final asset. All right. So in the absence of no questions, I want to assume and take that as a confirmation that we are all on the same page. So with that said, we will move on to the final assets on our watch list. So the final asset we are looking at this morning is my favorite, and that is the XAUUSD, popularly known as the gold spot. And of course, last week we saw how the market banked on the rising US Treasury bond yield, the stronger US dollar to incite a massive sell move, as we saw here at the beginning of the week, all the way down into the 2006.20, and that was on Tuesday. And since Tuesday's trading session all through Friday's trading session, the market was a little bit choppy, as we saw market turn into an indecisive situation following the markets, the global market landscape's expectations. We had the trade war fears, we have the geopolitical tensions, uncertainty, and conflicts, of course, increase the demand for safe haven asset like gold, and we saw price take some deep buying activities during the course of the week, though the momentum was not really strong as market participants were looking forward to major event like the NFP, which is coming up this week, before making any form of aggressive bet. And of course, we saw during the early hours of today, as soon as the week opened, we saw a massive move to the downside. I actually missed out on that one. I was fast asleep when that happened. It happened during the Asian session. We saw price move over 220 pips to the downside this morning, and this I could attribute this bearish move to the Trump tariff plans, the fears of the top Trump tariff plans. As I did say earlier, that Trump is saying that countries that want to dump the US dollar, that it will place 100% tariff on these countries. So that is one fear that rippled through the market during the early hours of today, bringing that bearish momentum we saw here, strengthening the US dollar as well, and makes gold more expensive for holders of other currencies to get. So this will definitely reduce the demand for gold. Then we also have the increased yields, that is the rising US Treasury bond yields, making bonds more attractive at this point, and market participants, and this has caused market participants to divert their investment away from non-yielding assets like gold. Then the issue around the geopolitical tension may influence the gold commodity, but at this moment I am not sure what is likely going to happen based on these fundamental factors. Though the softer risk tone in the market, that is the softer risk tone in the market, may cause global market to be cautious due to the macroeconomic uncertainties, and this could add support to gold as a hedge against volatility. Now, the trade war too is also a thing. Then the geopolitical tension is also a thing that could give gold some hedge in this market. Conflict like the Russian-Ukraine war, along with the instability in Syria. I forgot to mention that earlier. It just came to my mind right now. We saw the Iran airstrike on settlements in Syria. There are some rebels in Syria. I'm yet to have a detail into that news. I just saw the headline this morning, which could also favor the gold at this point in time. Now, let's take this information into the chart and let's see how the markets are digesting this information and what could likely happen prior to the US economic event. We have an event today, right? Today is Monday. ISM manufacturing PMI is coming up 3 p.m. UTC today. That's about 5 hours from now. So let's mark out the timing on that one. This could bring in some volatility into the market. Now, if the ISM manufacturing PMI comes in just as much as expected, it could slightly favor the gold commodity. But if it comes in higher, we could likely see price drop to the downside. So to help us navigate this market this week, I was able to identify a simple trading setup after taking into account the character of price action in the last 2 to 3 weeks. Now, this is what I was able to come up with. The first thing I was able to observe here is this beautiful demand zone, this area between the 2,605 and the 2,620 had played a significant role in holding gold prices. So every time price comes into the zone, market participants see the gold as cheap enough to buy. As you will see, this went on for about 2 to 3 weeks, making it a strong support zone. In fact, last week we saw how that area became a support zone as well. And then look at what is happening this morning. Now, despite that strong 230 pips move to the downside this morning, we saw that as soon as price came into that 2,620 area, we begin to notice buy pressure resume around that area again, which for me makes this area a robust demand zone. Hence, we need to be very careful before just jumping into a sell position. Now, in addition to the fact that we have a demand zone, look at this. Let me zoom in so we can see. I was able to spot an ascending channel after price dropped into that demand zone last week. So after connecting the series of higher lows, we have the support line of the ascending channel, and then we have the resistance line after connecting the series of higher highs. Now, something interesting happened this morning. We saw price break down that support line for the first time in about 3-4 days, right? Price broke down that trend line. Now, that trend line here also lines up with my key level for this week, which is at the 2,640 area. Now, despite the fact that price is sitting above that demand zone, I will not ignore the possibility that sellers could come in anytime soon, especially after observing this strong breakdown of this confluence where both the support line of the ascending channel and the key level at the 2,640 shares a beautiful confluence. So we could see a situation where price could come back, retest maybe the 2,640 or that trend line to incite a sell-off. So what we shall need to do now is exercise patience and wait to see how the market will react to the 2,640. Will price action break down? Will price action break down the 2,640? Sorry, will price action retest the 2,640 to continue the downtrend scenario, or will it break it above to continue an uptrend move? So this is what we are looking at. Let me show you, give you a visual representation of what I'm talking about. So breakdown, retest, it's a potential for sell off, and then a break above, continue buy pressure above the 2,640 could incite an uptrend scenario. So we are at a crucial juncture. So let's scale down into our execution time frame, which is the 1 hour, to see how the market is playing out so far. So right here on the 1 hour time frame, this was what I was talking about earlier. We saw price started the week around the 2,651, dropped over 230 pips to the downside, and since then we've seen price action resume and a momentum from that particular area. Now, like I said, this is the trend line we're talking about on the 4 hours time frame. Will price come back to retest the trend line? Well, that is something we are going to be looking at today. And secondly, if we look at the distance where price action is right now and that trend line, we are talking about 110 pips to catch here. So I don't know if we can find a setup around this area that could make us join that counter trend, or we should just wait patiently for price to come back into the structure or the 2,640 to see how it's going to react to this area. If we see selling pressure in any of the zone, we are willing to join a downtrend move. So we could look out for double top structures, head and shoulder patterns, that is between the 2,640 and the trend line, to join a sell-off. But if price breaks above the 2,640 and price continue to find buy pressure above it, it could incite a sell-off and a buy, and then we could look out for more opportunities to buy at the breakout of the 2,651. So with this structure we have here, I think it will make a lot of sense that we scale down into the 15 minutes time frame to see if we can identify a structural detail around the structure to help us navigate this market around the 2,000, around the 15 minutes time frame. So right here, bringing out my line chart, I think I have a structure at the 2,633. So we want to be marking this one out quickly. We have a 2,633, which is way below the key level at the 2,640, right? And that is that one there. And then one thing we also notice is the bullish trend. Of course, we want to acknowledge that one too. So we have an ascending trend line in place. Now, sorry, I want to make this one show here. Okay, now, so we have price above the structure. So we will be keen on buying above the 2,633. If price comes back, you can buy here. So the fact is that price is still trading above that trend line, which we identified earlier. So as long as price remains above the trend line, it's good for us to buy. And then as soon as price gets into the 2,640 or close to it, we move stop losses to break even and then look out to buy more at the breakout retest of the 2,640. Now to sell the XAUUSD, then we will need the ascending trend line to be broken to the downside here. If price breaks down the ascending trend line retested, then we can consider selling from that particular area to join the downtrend continuation. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates on what I think is happening around this particular area on during the course of today's trading session. So let's see how this is going to play out going forward. That is my simple view, and that reminds me, for go challengers, we are going to be scalping this market together again today. 30 minutes into the New York session, I will be going live for the go challenge for scalping only. So we shall be looking at using the structure we have identified here on the 15 minutes time frame to guide our trading decision. So I look forward to seeing you guys in that particular session. So I don't know if there are any questions whatsoever as regards to what we have talked about so far today. I will be taking the next 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. All right. So I guess in the absence of no questions, we are all on the same page. And it's on this note we have come to the end of today's Forex Morning Mastery. And it has been a great moment with you guys, from Fluoride to C40 to Michael Moore. I'm glad to have you guys. And for those of you who are behind the scenes, not commenting in the comment section, well done to you all. So today we were able to take on 3 financial instruments, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD. And interesting enough, we were able to identify simple trading setups to help us navigate the first half of the week. I hope you are able to mark out these levels accordingly and structures. If you have done so, well done. Kudos to you all. So let's allow the structures to mature, and we are good to go. And for those of you who are joining us for the first time, you're highly welcome on board. Very glad to have you around with us. Try to subscribe to the channel so that you get updated with the market updates, the Forex market prep we usually do on Sundays, and of course the subsequent editions of the Forex Morning Mastery. I hope you are able to gain 1 or 2 things today. If you did, try to be part of our subsequent editions. The next time is Wednesday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here to review how well this asset have done and of course prepare for the second half of the week. And always remember, trading the financial market is a risky business. And due to this uncertainty in the market, we always want to have a well-defined risk management approach. Please, this is very necessary to reduce the risk of exposure into the market. Every trade we take, every decision we make is more or less an educated guess until price action it's your TP target. So it's on this note, I would like to wish us all the best of luck. Trade smart, trade consciously. Do have a wonderful evening, everyone. Bye.